This is the new market outlook for this week. We're going to start off with some macro fundamentals, move on to the economic data for this week, and then the technical side for some of the pairs that we're going to be looking at. So starting off with some of the key things that we need to keep in the back of our mind for this week is that it's the final week of quarter 3, and we will be starting a new quarter, the final quarter of the year. So be very careful when you're looking into your opportunities in your investments, because a lot of the candles, higher time frame candles, will be closing out, for example, the monthly and even the quarterly. So, and some books are going to also be adjusted on the institutional side. So expect, price to react to those higher time frame levels. Another thing is that we still have those continued tensions in the Middle East, Russia and Ukraine. So commodities like gold and safe haven currencies like the yen are still quite sensitive to that kind of news. And now we're going to start off with Japan, move on to the UK, US, and then the economic data. So last week, to end off the week and even kind of continued sentiment going into today's Asian session, was kind of the whiplash that we saw with the yen when Japan's new Prime Minister Ishiba was announced as the winner. And the fact that he has a hawkish stance on the monetary policies, what that essentially means is that this new prime minister supports Bank of Japan's decision to continue to increase interest rates. But Bank of Japan did say that they're not in a hurry to increase those interest rates just yet. So we might see another rate hikes or so in the next couple of months. But as of right now, this past week, what we saw was that Bank of Japan maintained their interest rates at the level that it's at right now instead of hiking it up. But they did kind of indicate that depending on the type of economic data that we will be getting out of Japan, they might potentially increase more interest rates going into the end of the year. As we continue down here are some of the key things that Asian markets are watching out for, like the Chinese stocks, the PMI data that's coming out from China, the stimulus measures as well, and as we continue further down, the tensions in the Middle East also playing a factor into the yen specifically, and some of the other safe haven currencies as well. Going on to the UK side, what we have is a budget plan that's due to be released at the end of October, but also kind of to end off the year, another major thing is going to be the Chancellor Reeves aiming to attend a EU finance ministers meeting before the end of the year. This is a little bit significant when you're looking at euro or even the pound in general to trade that, because after Brexit, we did see that there were a lot of post-Brexit effects where a lot of businesses were being forced to move out of, or UK businesses were being forced to move out of the EU unless they had, a separate office and representation within the EU itself to deal with their clients there. And along with a lot of other post-Brexit effects that we have already discussed, in the past couple of years, ever since Brexit pretty much got finalized. So this is going to be important because this is kind of the first step into bettering the relationship between the UK and EU. And that's pretty much what this article is about, so closer to December 9th. But again, a lot of this is going to be market sentiment trading and fundamental trading leading up to some of these key dates, end of October, and then moving into November with the Fed's meeting with a potential rate cut there, and then also going into December with Reeves attending that EU meeting. Onto the US side, so we have the US elections, of course, but also we have been seeing that the equities have been pushing up and rallying with the bullish momentum. And a lot of that was based on the fact that, right about here, it's been fueled by the hopes that the Fed will engineer a soft landing with the interest rate cuts that started earlier this month. Essentially, that means that, we have been seeing inflation kind of calming down a little bit. But on the other hand, the second mandate of the Fed, which is maximum employment, being affected with massive unemployment claims. Every week we get that data on Thursday, and then also NFP, JOLTS job openings, all that employment data generally showing that there is a weak labor market. And so now the Fed is finally starting to cut those interest rates, and the sentiment is that we may potentially see some more rate cuts, a total of 50 basis points by the end of the year. So, are we going to continue to see that going into November's meeting? And last time the Fed said, a lot of the Fed officials, and Powell included, said that they were going to monitor the economic data closely. Last week we had PCE come out, core PCE on Friday, and we start to see that was starting to slow down. This is basically inflation data minus food and energy. Those are two factors that tend to skew inflation data because they're the most sensitive. But we start to see that that's starting to slow down, which gave us a little bit more confidence that inflation is coming to control. And then when you're looking at unemployment claims as well, that's starting to come down from the massive numbers that we're seeing the last couple of weeks as well. So from the Fed side, we're getting enough economic data and support that we might potentially see another rate cut happen going into the end of the year. Now let's go ahead and move on to the economic data side for this week. This week we have a lot of economic data just from the Asian session coming out. As you can see, even China's manufacturing PMI and services PMI, for a lot of them, we're starting to see that the manufacturing is starting to drop below 50, which comes into contractionary. And then maintaining at that 50 mark or above means expansion, so more businesses happening there, or just more money being essentially flowed and exchanged there. Which is a good thing, right? We want to maintain above 50, but compared to the previous in the forecast, we are starting to slow down and weaken there. Going into Monday, we have a bank holiday from Canada in New York session, and then we have Powell speaking. So I do expect the market to be a little bit more volatile around that time because we're essentially looking for some hints of what is the Fed essentially going to be doing and what's the outlook like for Powell going into the end of the year or so. After that, as you can see, for the majority of the week, we're going to have a lot of low impact, medium impact data, but some of the high impact, if you're trading in London session, for example, it's going to be the CPI flash estimate coming out from Euro. And then we have the manufacturing PMI coming out from US, but this is also NFP week. So we want to start paying attention to more of the employment data that's going to tell you, what kind of NFP numbers can we expect to see and potentially position your trades according to that. So going into Wednesday, you also have the ADP non-farm employment change. And then Thursdays is kind of where I focus a lot of my attention on when it comes to NFP week, because you also have the challenger job cuts and you have the unemployment claims, which comes out pretty much every week. So by now we should be able to understand, what kind of picture is this painting, and are we going to start to see NFP data that's a little bit more in our favor, or are we going to start to see another, massive hike, like we did in the last couple of weeks or so, and then that kind of throws off the market and shows that volatility, which you can absolutely trade. But again, you need to understand what kind of data we will be getting. And the fact that the market will be reacting to the actual versus the forecast in the first, 30 minutes to 15 to 30 minutes, and then finally kind of adjusting itself to the actual data and then the previous, which is the more important. Now, coming on to the technical side, we're going to start off with US30 on the monthly, and we have a high that pretty much price came up and tapped into, which was that 42,700 area. And once again, these were some of the profit taking levels that we had discussed. So, expect price to kind of have a little bit of trouble breaking past that until, from a technical perspective, we can start to see a little bit of corrective moves, a little bit of consolidation, pretty much market generating some liquidity prior to a continuation up. So even on the weekly time frame, we start to see that price was starting to exhaust out a little bit here on that bullish momentum. So after creating that last support a few weeks ago, breaking the previous highs, and then, still maintaining that bullish momentum, we came up to that 42,700 mark and then rejected those buyers. And this week, we may potentially continue that bullish momentum, but I would like to see a little bit, some sort of a bottom wick or so, kind of rejecting sellers here prior to a continuation back up. The sentiment from a fundamental perspective is that we're going to maintain this bullish momentum to the upside. But just from a technical perspective, we need to see that aligning here. And that's the bottom wick right about here from the last week. So essentially what I want to see is, can price have enough volume to come back down here, grab some more liquidity prior to a push back up. But as of right now, these are the two important levels that we're going to be watching out for this week. When you drop down to the daily, this is really where you start to see that exhaustion happening. From a technical perspective, where price came back and tapped into these previous areas, grabbed that liquidity with this candle here, And the way that you spot a liquidity candle is to see, the candles that follow after, and that's massive momentum to the upside, essentially creating new highs. After we break above that 41,900, almost 42,000 mark, we start to exhaust out with these candles here. We have one last bullish run up after that core PCE data and a lot of that US data, unemployment claims and all that coming out. On Friday, mostly with core PCE, we start to get that push up into that 42,700 profit taking level. We reject those buyers to the up top and come right back down. So as of right now, what I want to see is for any continued buys, I would like to see price continue to break above this resistance that it has now created right about here. So, break its own high and then continue to the upside. And we have a pretty good range that we can, scalp or potentially day trade here and then let runners go if there's continued bullish momentum. If not, and price flips back down, we have already created somewhat of a bottom wick rejection right about there. So I would want to see price break its own low, and that way we can come back down and kind of target, profit taking levels right down here. So like TP areas right down here. So that's going to be that 42,300 mark. So in between this range, we're not looking for a trade just yet. So matter of fact, I'm going to remove this as well and just put a horizontal line. You drop down to the 4-hour time frame and you can adjust these levels right up top here as well. And as you can see, we're kind of sitting in this consolidation. So when the market pretty much closed out on Friday, we came right back down into this area. As of right now, we're kind of just respecting this previous resistance area as a support. So I want to see if candles can flip and then continue bullish, and that's your buy opportunity. If candles break below this and continue back down, then you have those clean sells to come back down into that 42,000 mark. But as of right now, I would not be looking for a trade opportunity in this 4-hour consolidation. Let's come over to GJ. So again, this pair is affected by the yen as well. So we kind of just discussed the fundamentals and, the massive push up and then reverse and, or massive push down and the yen strength and then a reverse on the fundamental side as well. So go ahead and reverse and kind of watch that again if you don't really understand what happened with the yen strength. On the monthly time frame, we have that resistance that's being formed here at that 196, and this month we have already pushed into that, rejected those buyers, pushed right back down, and then came back down into this previous consolidation area here as well. Rejected those sellers, and we're kind of just hanging around here. When we drop down to lower time frames, we will start to see a little bit of consolidation being formed. So here on the weekly time frame, we start to see that a little bit more clearly, where price is failing to break above and close above that area. So last week we had that massive push up here, and again that came from Japan's new prime minister being announced, basically Ishiba, and then all the buyers here are being rejected and then pushed right back down as the yen start to gain a little bit more strength, right? So if the yen gains some more strength, then obviously GJ is going to come right back down, and when GJ is pushing up, that means the pound is a little bit stronger than the yen. And then also we have this another level that I'm going to mark off that kind of hones in more into our consolidation area that we're going to see when we start to drop down further on this pair. When we come onto the daily time frame, we start to see how price is pushing up, reverses right back down, taps into that area like it had previously to the left, and then continues its bullish momentum to the upside. We come right back down here more recently, and we start to see a consolidation here where price tries to break above, but then after that we see a reverse coming back down and essentially grabbing liquidity from this previous massive consolidation area. We finally grabbed enough liquidity to continue that bullish momentum. As you can see, we have not had a bearish day on GJ for a couple of weeks here. And then a nice top wick rejection. The yen gains its strength at that 196 point and then pushes right back down. And we come back and close into this daily consolidation level. Now, this is a good opportunity if you're looking for scalps or if you're looking for day trade opportunities. But when it comes to swing trades, I would stay away from daily consolidation for any swing trade opportunities and wait for price to clear out in one direction or another. So as of right now, as the market has opened up, we can clearly see the yen gaining some more strength and kind of just continuing that strength from last week as price makes a top wick and starts to push down. Now, if you're looking for scalp opportunities, what you're going to do is wait for price to break below the support area. So you're completely out of this 4-hour consolidation, and then continue that bearish momentum to the downside that you can be a part of for almost 100 pips. Come back down into that 189 mark. That would be kind of my TP or even my take profit area, or take some partials here as well if you want to let runners go back down further into that 195 mark, 186 or 185 mark, actually, not 195. But yeah, so as of right now, we're just kind of correcting that massive bullish momentum to the upside. 189 is going to be a crucial level to kind of determine which way price is going to be headed for GJ. So there are a few things that you can end up seeing here. Price continues down here and then pushes right back up, grabs some more liquidity, essentially push back up, come into that 192 mark, and kind of consolidate out here, or maybe give you a little bit of a corrective move here just to create a higher low, and then continuous bullish momentum to the upside at 196. Or if yen is going to maintain its strength, then you're going to see 189 here being broken, retested, and then come right back down into these previous liquidity areas, and that's where you want to be a little bit more careful. But overall, you have a great opportunity for a swing trade once 189 is broken. Otherwise, you have about 100 pips that you can scalp and turn that into a day trade. Now, coming on to gold, we're going to hop up to the monthly. So a lot of that rally on gold is also happening because, another potential rate cut that we can see in November because of, the favorable PCE data that we have been seeing. And also the increased tensions that we are seeing in the Middle East, as we just saw on the fundamental side, that also having an impact when it comes to euro and a lot of the safe haven currencies and commodities. And gold is, of course, a safe haven commodity. You come onto the weekly time frame and we start to see that we have a lot of consolidation that was being formed here. And then when price finally did break out of it, we saw some nice bullish momentum to the upside. So that was all of your consolidation that was being formed. Once price broke out of it, it gave you a nice little retest right into these areas, previous wick rejections. And then the last few weeks, we have maintained that bullish momentum to the upside. Last week, we rejected right into that 2683, almost 2700 area. So 27, I'm also going to be very careful, another profit-taking area here as well. What I would like to see at this point is price reverse back down into that 2500 mark and then continue its bullish momentum back to the upside. I do think we can continue that bullish momentum in gold as well, given the fact that, we are potentially going to see more rate cuts going into the end of the year when it comes to the Fed, and then also, the continued tensions in the Middle East. But we're going to drop down to lower time frames to look at opportunities that can be taken advantage of right now. So as we came up into that almost 2700 mark, which was a profit-taking area, we started to see that on Friday we closed off bearish, breaking previous lows. And today we have a little bit of a top wick and price is starting to push down. So potential scalp opportunities in Asian session or even going into New York would be first target, obviously the previous daily low right about here. And then after that, we have those clean momentum or clean candles to the left coming back down into that 2580 mark, almost 2600 mark. That's a pretty good range for a potential swing trade opportunity to come back down and correct that bullish momentum and go back up to the upside. When you come onto the 4-hour time frame, you start to see how as price was inching towards that 2700 mark, almost 2683, it starts to consolidate out on Friday and then comes right back down into that almost 2650, 2640 mark, and then rejects those sellers to the downside, ends up closing bullish. And then after the market opened up today, we kind of just continued in that seller's pressure to the downside. I want to see if we can end up continuing breaking below this. And first target would be kind of this consolidation support area. And then after that, further down. There's a very high chance because of the massive bullish momentum that we are already seeing with gold. All we need to see is from a technical perspective, some corrective moves, and just tap into that area and then continue right back up bullish, right? So that essentially is just going to be a liquidity grab prior to a continuation back up, or price kind of just hangs around into this area and then also just continues back up bullish from there. From a technical perspective, we are due for some sort of a corrective move. So price could come back down here, give you some corrective moves, and then come back down a little bit deeper. just from a technical perspective to grab some more liquidity prior to a continuation back up. So from a fundamental perspective, we don't have anything that would support a weak gold to come back down even deeper than that just yet. But we do have a lot of fundamentals that are going to be coming out this week. So a lot of the red folders that we're going to be watching out for, Powell speaking. So, whatever he says is going to have a little bit of impact on gold. You are going to see some volatility there with the manufacturing PMI. But most importantly, I do think gold is going to be a little bit more sensitive to the employment data that's going to come out from the US this week. So that's pretty much it for this week when it comes to the fundamentals, technical, and the economic data. As always, if you guys have any questions, feel free to reach out to me on Instagram at SharmaFX.